Hi everyone, JJ here. Welcome. Well, today we're going to look at some good news about Alibaba stock, the Chinese stock market in general, and the Chinese economy, which is not such great news. But the stocks have gone up just in the last session or two. Let's see what's happened, what's caused this, and what's the reason for optimism. Let's get into it. So the big news today is that Alibaba co-founders buy more than $200 million worth of shares, sending the stock up. And it was quite a jump, the biggest since August last year, I understand. So it says Alibaba's co-founders Jack Ma and Joe Tsai have picked up more than $200 million worth of the company's shares between them in recent months, according to a regulatory filing. And as we know, Ma has stepped back from leadership roles at the company and the public eye, while Tsai remains chairman. There have been quite a few management changes in recent months. I've been through that in previous videos. The company's shares have slumped since November after a planned spin-off of its cloud business was cancelled. Well, the shares have slumped a lot more in the last year or more, and we'll have a look at the price action there too recently and going back 5 years, because it's not looking good, as many people know, for Baba. Could this be at the turnaround or just a slight bump in the shares because of news like this? There was other news that sent the stock up in Hong Kong trading and then the US trading even more with this news, and we'll look at that other news in a minute. An entity linked to Tsai's family office, Blue Pool, acquired nearly 2 million Alibaba depository shares, so the US shares worth $152 million in the fourth quarter, according to a Tuesday regulatory filing. So they bought the American ADRs in the US market, not the Chinese market, which is significant as well, after all the talk of them being delisted over time. So we've got the chair of the company buying in the US. Separately, sources familiar with the matter, not naming anybody here, told the Times that Ma acquired $50 million worth of Alibaba's Hong Kong stock. So Tsai bought in the US and Ma bought in Hong Kong. And this is the other news that hit headlines not long before that. It says China weighs stock market rescue package backed by $278 billion, US billion dollars worth. China considers offshore money for stabilization fund. Some policy measures could come as soon as this week, this trading week, and this was reported by Bloomberg. And here we see in the last US trading session, the ADRs was up 7.87% at the end of trading, and we see that other Chinese stocks as well. Baidu was up 7.49%, BYD up 4%, and JD up 7.2%, and Tencent Holdings, these are traded on the OTC market, same with BYD, up 5.73%. So all of these shares being lifted in the news that's just come out. So more on that rescue package, the stimulus news. Chinese authorities are considering a package of measures to stabilize a slumping stock market, Bloomberg News reported on Tuesday, citing people familiar with the matter. Nobody's being named here. Sources. Chinese policymakers are seeking to mobilize a 2 trillion yuan, that's $278.53 billion, mainly from the offshore accounts of Chinese state-owned enterprises, as part of a stabilization fund to buy shares onshore through the Hong Kong exchange link, Bloomberg News has reported. China's stocks rose immediately after the Bloomberg report. The news also says they are also weighing other options and may announce some of them as soon as this week if approved by the top leadership of the country. Of course, the whole stock market there has gone down to lows. So this is probably looking at a rescue package stimulus for the Chinese market. Whether it will work over the long term or medium term or even short term and just give a short boost and then go down again remains to be seen. But Baba definitely has got a lift out of this news in the short term, plus the insider buying news as well. And the commentary here, China's stock markets have had a wretched start to the year, and we'll have a look at that, with patchy economic growth and renewed slump in home sales last week, solidifying foreign investors' resolve to steer clear of the country's markets. The whole stock market and the real estate market and the economy in general, some really bad news coming out there, low growth and bad news after bad news, it seems, in recent weeks and even this week. So they're obviously looking at boosting the stock market and boosting the economy. It would not surprise me if they had massive stimulus for the economy in general, but that remains to be seen. Maybe they won't. global money managers who have been sellers of Chinese stocks as the post-pandemic recovery has sputtered say it will take a long time or major stimulus to repair the property sector, which at one time accounted for a quarter of the economy. Overseas funds have sold roughly 1.6 billion in Chinese equities collectively so far this year, driven mainly by European active funds and Hong Kong passive money, Morgan Stanley said in a report last week. So an outflow of investment funds from China. The government will be looking at this. They must be looking at this. So they'll be wanting to get international investors back, I think, just my opinion, because they'll be seeing this outflow of funds and the stocks going down. Many people have the opposite view that the government doesn't care. They just don't care about the stock market. They don't care if it goes down. They've got other worries. But I think all of these things work together. I think they realize that the stock market, the real estate market, and the wider economy in general. So I think it would not surprise me if we saw a substantial stimulus in different ways, including for the stock market. These are just rumors, of course. There's nobody, this sources, citing sources, but the stocks have improved just in the short term anyway because of this kind of news after a long time going down, and we'll have a look at that. Now, if you're getting value out of this episode so far, I'd really appreciate it if you remember to hit that like button to help to spread it to more people, because that's what we want. Thanks. So in terms of helping the stock market, we also had this news just in the last week which said China's biggest broker curbs short sales after stock rout. So stopping short sales to try and stop that selling and the market going down even more. And this China sell-off leads to record 38 trillion gap with US stocks. Chinese equities are lacking catalysts, said foundation asset. MSCI China index is 60% cheaper than the US equity benchmark. So overall, they're talking about the overall market in China being way cheaper than the US counterpart. Value investors have been looking at it for quite some time because it's just keeping going down, down, down. At some point, it would have to rebound, perhaps, but then again, everybody's well aware of what happened in Japan when a bubble burst there around 1990, and it was the stock market bubble and a real estate bubble at the same time. And of course, it's taken really 30 years. So in my opinion, a number of things could happen for the Chinese market in general. It could be like Japan, where it takes decades to get back to where it was, or it could just go along the bottom for a long time, go nowhere, or it could rebound rather quickly. That's another possibility. These stocks could rebound. The fundamentals of these companies, Alibaba in particular, is pretty good. So it remains to be seen what will happen with the Chinese economy. The economic growth there has been talked about as 4 or 5% for the year, which of course is a lot lower than it has been in previous years, around 10% at some points. But having said that, that's pretty low for China over recent decades. Compared to Western countries, of course, it's pretty high. So will it continue? Will the Chinese economy come out of the slump, and will that help the share market? Or will this turn into a really long, sustained economic downturn for China, and the share market won't go up for a long time? We're just guessing here, speculation. Here's a chart showing the divergence, the comparison with the US stock market. The difference between the market value of the US and Chinese stocks rises to record. This is a Bloomberg chart, and we can see there that the MSCI China Index PE compared to the S&P 500 index is pretty low there, and the difference between the market values of US and Chinese plus Hong Kong. The chart there clearly shows Chinese stocks are way below the US stock market in general, but that doesn't mean that it's going to go up anytime soon, but it could. We just don't know that. I've said that repeatedly, that we can predict all we want, but it may not happen. We're just speculating. We can just go on the individual companies, the individual stocks. Now, if you don't know yet, I've started the Art of Value Patreon for just the price of a cup of coffee each month. I am making exclusive videos, extended videos, blog posts talking about stocks that I own, stocks that I'm researching, the market, and many other things. So I'll leave a link in the description if you want to check that out, and hopefully see you over there. Now, on the Chinese economy in general, with the bad news coming out from there, we have this CNBC article which says it's really bad. China strategist warns of deflation and rock bottom consumer confidence. So this China strategist has said I've been in China for 27 years, and this is probably the lowest confidence I've ever seen, Sean Rain, founder of the China Market Research Group, told CNBC on Monday. He forecasts that China will experience another 3 to 6 months minimum of very painful economy, and the world's second largest economy has faced a lower than expected recovery in 2023 after COVID-19 restrictions. Now, of course, if we look back to the global financial crisis, the GFC, if we look at the US market back then, when things looked the worst, it was the stock market started to turn up in March 2009 when the economic conditions looked terrible. The stock markets are usually forward-looking in this situation. So when it comes to the bottom of the market, the news about economic situation is often really bad, but that I'm not saying that it's going to turn up. I'm just saying that's often the situation with the share market looking forward. It really took years after 2009 for people to be confident about the economy. People stayed out of the stock market. So the question is, when will it turn up? Will the stock market be forward-looking and turn up before the economy has a lot of more confidence? So we're talking about confidence here, which is sentiment. More detail on that, it says deflation may soon start biting into Chinese growth as Beijing looks at another 3 to 6 months of very painful economy, according to one analyst who covers the country. This is something investors need to be cautious of. The economy here is bad. It's really bad. I've been in China 27 years, and this is probably the lowest confidence I've ever seen. So deflation is starting to wield its ugly head. Consumers are waiting for discounts. They're very nervous. So consumer confidence is rock bottom. We really just don't know what's going to happen. We cannot predict. As I said in the GFC, when things still look very bad, the stock market did turn up. Well, we're talking about the US stock market versus the Chinese stock market, which is quite a different beast. Will they have stimulus? A lot of stimulus that could help. Bazooka-like stimulus. Alibaba's results haven't been bad. Of course, growth is lower. It's not as if they've been doing really terribly. It's just the stock price has been going down and down. And with positive news coming out now, will it change things? What remains to be seen. So let's have a look at some of the stock prices with these Chinese stocks, especially Alibaba, and see what's been happening recently and over recent years, which has not been looking pretty. We can see year to date, after that bump that we've just had in Alibaba, it's actually only marginally down 0.99%, not even 1% down for the year so far. But just a session before it was worse, we can see the spike that's happened there. And we can see over 1 year, it's down 38%. So really not doing well over 1 year. And we can see that just the spike up there in the end from that last session has helped a little bit. And if we go back 5 years, we can see it's down 53% over 5 years, which is really bad performance. And we can see the peak there back in late 2020, in October 2020. It's been really going down ever since and scraping along the bottom and the low in during 2023, but not doing well over 5 years at all. And we can see another big Chinese company, another strong company is Tencent. And we can see over the year it's down 29%. So similarly, not doing great over the past year. 5 years, after 5 years you've been invested in Tencent, over 5 years, you're down over that time. And there was that big spike, that big peak around the same time as Alibaba, and it's been going down ever since, of course, but up from the lows, but not much really. And we can see that JD.com similarly down 62% over 1 year, and over 5 years again it's down 1.74%. And the exception here, of course, has been PDD. I've talked about that before. I've question marks over their financials. The margins are just so good. Are they too good to be true? We'll know in time, but it is actually up 46% over the past year, so it's been doing very well. It did go down as well though, and we can see it's had a big spike, but over 5 years it's up 377%, so quite an exception here. PDD doing well. It's a much younger company. It's had a rapid rise, but it did go down. You see the big slump there in 2022, but it's had a meteoric rise since then. Been a lot of news about international expansion and Temu doing well, And as I said, I kind of question their margins, but we'll have to see what happens over time. It's doing well and the stock's doing very well. So that's some very recent news about the Chinese stock market, the economy, and some of the stocks, including Alibaba. So what do you think? Do you think that it's going to bounce? Do you think it's just going to go along flat for a long time? Or do you think that it could go down even further? Let me know. It's kind of speculation at this point. It does look like China's going to stimulate the economy and the stock market, but some people say that's not going to happen. It remains to be seen, but let me know in the comments. What do you think is going to happen? Do you think Baba is going to stay low, or is it going to be this rebound? Now, if you're watching this on YouTube, I'm going to put a link here to what YouTube thinks that you in particular should watch next based on your history. It's probably related to this video as well, so go and watch that next if you want to. And thanks to everybody for watching or listening, and I'll see you in the next one.